Hello, today is March 24th, 2018. My last call said I wasn't interested in catching the dagger, the falling knife, but this was a support level, and if we gapped over this high on Friday, I think we'd have an all-day rally. Well, we didn't gap over the high, so the signal never triggered. I do think this was a valid support level. Further evidence of that is that we were way down in futures when I made the prediction, and we gapped up, showing this level had some validity to it. However, we didn't have a gap under this level, and that means that support should have held. It obviously did not hold, and that means I consider this a false move, more panic selling, and we have a non-MEJT target of 2641.59. We should return to this point. If we don't return there fairly soon, I'm willing to admit I was wrong, but I'm making this a target. Let's see how significant this 23rd of March could be. This is a pattern which usually closes at the day's high. When it closes near the low instead, it's very negative. It leads to more selling. Dropping all day on a Friday usually leads to more selling Monday, almost always. If we gap up instead, it's a sign of something else going on, but unless we gap up over this high, which is the longest of long shots, I think we have more selling coming Monday at the open. But remember, I'm considering this panic selling. This isn't the time professionals sell right at the end of the day when liquidity dries up. It's the time when the amateurs unload. Here's the MEJT chart from Friday. It said here ultimately lower prices would print, but it says the drop was false and that we would return to this line, which we did. Here it said lower and higher prices would print. It gave a buy signal, which actually worked in the time when the market was dropping all day long. Well, how about Monday? Monday should be the pattern with the early low, and I'd be surprised. I've been surprised before, but I'd be really surprised if we didn't just keep on dropping. And when we keep on dropping, we will go under the 200-day moving average. It's a very popular buy-sell indicator for people. There could be a huge volume of selling if and when that happens. But it'll be a bar if that happens, completely under the lower Bollinger Band. Those things are statistical outliers, and they tend to lead to reversals. They don't tend to stay under this very long. Plus, I've corrected for a bar I missed in my DeMark count. It should be bar 13 of a sequential buy signal on the daily chart. Now, all the way up, DeMark stuff gave sells that didn't work, but I have to tell you, as far as catching a bottom, that hasn't happened, so I'm going to stick my neck out and say it works this time. Now, when you print bar 13, it isn't always the exact low. It just identifies the time of a low. The signal could fail. It could go into a 939. But if that happens, I think there's a good chance it'll work Monday. Now, what makes life interesting is the lower the number of the bar of countdown, the 13 bars of countdown, the lower the number of the bar, the stronger the ensuing rally is. So if we undercut the low of bar 1, 25.32.69, we should have an extremely strong rally, which could even challenge the old high. But that's if we do not undercut it. But if we undercut it, it'll be bar 13 instead of 1, and the ensuing rally should be weak. A rally nonetheless, but a weak one. And let's not forget, I think we'll go under the TDST line from here, and that's the support level. Let's look at some other things. If we keep dropping and challenge the February low, there's a good chance there'll be divergence with fewer stocks having negative patterns now than they had then. We already have an excess of pessimism with an off-the-charts number of puts being purchased in relation to the calls. Here's the McClellan oscillator of the NASDAQ under its lower Bollinger Band. It's a sign of a low once we reverse. So what's going on? Well, first of all, we got an old target out of the way. This is 179 points. I said we should go under this line by as much as we went over it. And if you measure 179 points, we're under the line. Now, a target isn't a stop and reverse, but at least the downside implications of this pattern have been satisfied. Here's a chart of futures trades, and it's important to see what happens at big lows in the market. Volume spikes. I prefer volume over 3 million contracts, so we may get that Monday. But if you go back here, there haven't been that many lows, but each time we get a low, here's the Trump election low. Look how you get spikes like this, only at lows. And if you go back, you'll see how they identify the lows. And the higher the spike, the more significant the low is. Here's the diamond on stilts pattern. Here's your left stilt. Here's your diamond. We're now making the right stilt. The first test of the origin of the left stilt should hold. Now, sometimes we go under it. That would be bar 13 going under this with a weak rally, but sometimes we stop short of it because the first test usually holds. It can hold if you stay on top as support. That's the commonest, or if you go under it, it can be resistance. But if we're in a wave 3 move to down here, which is what I had been thinking, this is a bump in the road. So what could be going on? Well, let's come back here. It's possible that this is still wave 1, but this might be A, and this could be a 3-wave B instead of what I had thought, which is wave 2 and a 5-wave 3 coming up. This could be an ABC. There are any numbers of prices I can make work, but the one I like most is 25, 36, 26. It's not the only one. But what you do, you take the middle of wave brown B and the middle of wave brown C, and you set that to 38.2. Excuse me. You set this to 100, and you'll see that's 38.2, and 61.8 is 25, 36, 26. Now we have a number of important support levels coming up. We have a TDST line we saw in the other chart of 2578.04. We have a MEJT target from February 9th, 2554.86. If the market slices through two important levels like this one, like these, you would think it's in free fall, but in fact, usually it's taking off more than it can chew, but biting off more than it can chew. So if we do drop to the origin of the left stilt, you look for a rebound. If we continue dropping past a 12.5% drop from the all-time high, which is a Gann number, I think then you might go into free fall. So if somebody wants to catch the falling knife now, here's your stop. Loosely interpreted, but that's your stop. What I'd like to see, might not get what I like, but what I'd like to see Monday is a huge sell-off on high volume, ideally hitting 25, 36, 26. If that were to happen, if that price held and this price were your stop, I think we have all the makings of a strong rally coming up. And I think it's possible, that's not the chart I want. I'll find it eventually. I think it's possible that this is 1, but this is wave A, this is B, and I think we're going to have wave C to complete the ABC, which will approach but not surpass this old high. If that support holds on huge volume, we could have a big rally coming up, and that's today's call.